Morning, Steve Free in Chicago with the morning grain comments. Well, it's wet here in Chicago, and the 6 to 10 day and 11 to 15 day map for all of the Midwest, Delta and Southeast is wet. So we'll see how much premium, especially corn, wants to put in the marketplace because of this wet pattern delaying the planting. The three things that we're looking at over the last couple of weeks, number one is the trade deal with U.S. and China, number two is weather, and number three is money flow. As far as the trade deal is concerned, the Secretary of Treasury and the trade representative are going to Beijing this week and try to hammer out the last few steps of the trade deal. There's still some concern, number one, that they may not be able to come to a conclusion. Number two, the Chinese may be slow playing this to impact the election of 2020. So we'll see if China actually needs a deal to stimulate its economy, or if they, again, pass on some of this potential completion or resolution of the deal. Again, it could be a game changer for U.S. grains if they agree to buy U.S. soybeans, corn, wheat, sorghum, meats, and ethanol and DDGs. So fingers crossed as far as the farmers are concerned that they can come up with a deal. As I mentioned, 2-week wet forecast for the Midwest. Right now we're expecting that USDA should say 14 to 16% of the corn is planted versus 26 average, 3 to 4% of the beans versus 5 average, 7 to 10 of the spring wheat versus 33 average, and the winter wheat crop condition could see a 1% increase from the 62% good to excellent. If the rains continue, there's some people that believe that we could lose as much as 1.3 to 1.6 million acres of corn switch to soybeans. That would probably reduce the crop potential by 250, maybe 300 million bushels. The average guess for the 1920 corn S&D carryout is 2350 versus USDA's 2035 this year. So that would almost wipe out the carryout for 19 and 20 that we had plugged in because of higher acres and a trend yield. As far as the other issues, we'll be watching for the bean carryout for 19 and 20, around 875 versus 805. Again, the Chinese are not buying as much beans because of their African swine fever, and we'll see how that impacts down the road, whether they have to buy beans under a trade deal from the United States, or if they don't need as many beans because of what's going on with their hog herd in China. We also note that as far as wheat is concerned, we'll see the wheat quality tour in Kansas this week. They'll have wet feet, and we'll see what kind of crop numbers they come out with the Kansas crop. Most people are looking for 1920 wheat carryout here in the United States at 1180 versus 1087. And again, that's a higher crop. And then we'll have unknown as far as our export demand is concerned, because Europe and Russia should see better crops than they did last year. We'll be seeing deliveries. Right now, registrations for the beans is 1079, so deliveries could be 1,000 to 1,500. There's 3,547 registered for soybean oil, so 2,300 to 3,500 deliveries. There's no registered for meal. 1,533 for corn, so maybe 1,500 to 2,000 corn, and 170 registered for soft wheat with no deliveries expected. Right now, hard wheat track basis levels are about 20 cents over delivery in the cash side of things. So again, a little bit better tone, sloppy weather across the Midwest, waiting for news about the grain deal with U.S. and China, and watching the funds who are now estimated to be short 68,000 wheat, 315 corn, 138 beans, 25 meal, and 65,000 soybean oil. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.